to click at. I thought you were.
He's gonna have a costume.
Pinching the horse or something. All right, so Vitaly, where are you at?
I just got out of the fucking metaverse, dude, and it was amazing. That porno is sweet.
Oh my goodness. All right, well, welcome.
Thank you, Meta. I just want to say thank you, Meta, the only one doing well.
Did you use virtual lotion or what?
No, I use real lotion, real hands.
Welcome everybody to Finance Junkies. Interesting stuff happened in the market today.
Before we continue, these are the controllers. This is why it's hard to masturbate, because you have to hold on the controller.
Can you not say that word, bro? I said that once on TikTok. They censored me so badly for saying that one word.
What?
Like
masturbate?
Yeah, they don't like that word. They don't like that
part
word.
of sex ed. I don't know what you're talking about.
No,
any of those words.
Not advertiser friendly, that's for sure.
Or even especially if you talk about number one. Mr. Beast had a whole thing about that. If you talk about number one at all in your video, like the views plummet.
Yeah, if you talk about peeing or something.
Yeah. Or like the one that starts with the letter U, if you use that word, he was like, never again, not even a joke, nothing. The hit to your monetization and your reach is like not worth it.
That's okay. It's on its channel. Who gives a shit?
Oh, of course, yeah.
Well, when we're on the official Finance Junkies channel, no cursing, no.
everyone in a suit. Everyone has to look like Chris Patel looks like in the thumbnail.
Yo, one day we
what are you, our boss in that thumbnail? Like, what is that?
Huh?
He's like the manager of the Finance Junkies in the thumbnail.
He's
no, Chris has never sent me another photo. In fact, none of you sent me any photos except Vitaly. Vitaly sent me photos. But I need more headshots of you and Carlos.
Yeah, Tristan was telling me. Speaking of which, shout out to Tristan. Great guy, and also does a great job on the thumbnails.
Yeah, super dope.
Someone said, "What's Vitaly's drink?" We know Chris likes vodka. No, actually, I'm more of a gin guy. I like gin. Hendrix, baby.
It's Earl
Grey. You ever have a Vesper martini?
I haven't had. No.
It's the James Bond one with gin and vodka. It's pretty good.
Oh, nice.
Yeah. Mine is juice. When you have a kid, there's endless amounts of juice in your house.
All right, so let's get to the topic of the hour. Amazon earnings. They beat expectations on revenue by 2.9 billion. Stock rallied about 12% after hours to the high 120s or 122-ish. Then it fell back down as CEO Andy Jassy started talking about AWS spend or AWS growth probably declining given what he's seeing by.
It wasn't Jassy. It was the CFO.
Oh, really?
So the CFO is the one that tanked the market when he said we're seeing a slowdown in April. So the expectation was we're going to have lower AWS growth, and the lower amount was really low. It's like 11% AWS growth. Which, if you look at Amazon and you just look at
11%, did he actually say that?
Yeah, I think he said 11%. So the minute he said that, everyone just panicked. And then it just kind of was like a super cycle of selling. But they completely missed a great quarter because of like maybe 10, 20-second comment. But, I think this company is going to do exceptionally well over the next 3-5 years.
Chris, why do you think the market tanked? What made those comments trigger the market tanking it?
Because any slowdown in your... Okay, so if you look at Amazon biggest moneymaker right now is AWS. So if AWS slows down, that means your company's slowing down, your profit's slowing down. So that's not a good sign, right? So yeah, that's pretty much the gist of it. But what they missed completely was their e-commerce is still really strong. You're still seeing advertising, which is growing like gangbusters. That's another one that they completely missed. So what it is when you have a very optimistic view, and the market was very optimistic. It was up almost 5% without the earnings coming out, right? Yeah. So the market had a lot of expectations going into this. So the minute that one thing didn't 100% line up to what they wanted.
I was just looking for that actually. Yeah. Okay.
Yeah. So like even their AWS, if you look at their guidance was lower, but they beat it. So Amazon always tends to do that anyway, where they guide lower than they actually get. I think a lot of their operating costs are being controlled right now. That's gonna impact them positively going to the next 2-3 years. They've just got a lot of things that are going to be going the right way for them. I think tomorrow morning we might see a sell-off in the morning, but smart buyers are going to be picking this thing up tomorrow morning, because you can see that the potential for this company to ride up very quickly is there. You know, so if it wasn't for that, literally that short snippet with that answers, we would have seen Amazon at 122 or maybe and open up at a good price.
So I don't know where you're. I'm looking at the transcript right now. All I found, maybe I don't see exactly what you saw, but so I would say this is Brian Olsavsky, the CFO, right? So I would say Q2 versus Q1. There's not an obvious year-over-year comp differential. Okay, so that means they're not going to grow too much. It's just, again, understanding which customers are cutting in some areas and growing in others and helping them get on, hopefully, to the new initiatives that they are planning as well. But, I mean, besides that, I don't see any actual – did they give a percentage? I don't see that.
They said like 500 basis points or something, right? That's what the argument was in terms of – let me pull up the exact quote. Because that as soon as they said that –
500 basis points lower – than what we saw in Q1. There you go.
Yes.
I see this.
Yeah. So if you saw 16%, if you see 16% growth year over year, and then it's slowing down by 500 basis points, which means 5%, that means that next quarter you're likely to see AWS growth at only 11% year over year.
I mean, that's massive. That's it's still fine.
Especially when you consider that last year they're growing AWS at 40% year over year. That is a dramatic slowdown. You're talking about 75% slowdown in their growth.
Well, so but once again, you're comping it to COVID. So that's the problem. Everything's still being comped to what happened during COVID, where of course they were going to grow 40% during that.
And do we know what their overall market share is?
30%. It's been flat, 32, close to 32%. For forever, like I'll pull it up real quick.
The problem is that those numbers make Azure look like a monster, growing at 30, and even GCP growing at 29 to 30% quarter over quarter.
But they're growing with a smaller base. That's the biggest. That's the biggest.
What do you mean by that? Oh, because they have less customers. Oh, I see what you're saying.
Yeah, let me pull it up before so we can see it together.
I did buy 50 shares of Amazon this morning, and I was high on my own supply when it went to 120, and then it came right back down. And I was just like, all right, well, now I'm DCing into Amazon. But I do agree with Chris. It might drop a little bit tomorrow, maybe get to like 99 again, 100, but I think smart buyers are not going to wave it off as
Friday tomorrow at 3:30. You'll see.
Yeah, it'll be bad tomorrow. It'll be bad.
I think. Chris, can you bring up that chart that showed all of the spending by the different companies? Do you have that chart?
Yeah, and just
I know it's like 73 billion or so. Amazon, the clear winner in spending. If they knock out anything in that spending that they're doing, I mean, all of a sudden, like,
so this is the total
fly to the moon.
So this is the cloud spend over the last 5 years. Yeah,
just zoom in a little, Chris. Yeah, there you go.
Can you see that?
Yeah.
Okay. So if you see this, AWS pretty much is flatline 32%. They're just staying steady. Right. So what's happening is the spend in cloud computing is going up, and up. OK, like 90% of all spending right now for IT infrastructure is still on-prem. Only about 10% has moved over to the cloud. So the pie is growing. The thing is, Amazon's piece of that pie is not growing. It's staying steady, which isn't a bad thing because you're still growing. You're just not growing as much. But if you look at what's in black, which is Azure, you can see that it went from in 2017 to 13% to now 23%. So, but even that number is starting to kind of like stabilize a little bit where you're not seeing it grow nearly as much. Now, the one that's very interesting is Google. Google is actually slowly modulating itself up and down, up and down. So, the expectation is which one is likely to gain more market share and at what cost. So right now, Amazon, what they did was they sacrificed some of their top line growth in AWS by working with their customers to optimize their cloud spend. So one of the things that was mentioned in the earnings call more than a few times was, customers are not cutting back their spending on AWS, but they're doing a lot more cost rationalization where they have a limited pool of money. So they want to make sure that it's being spent efficiently. So Amazon could be an asshole and just say, listen, you pay what we tell you to pay and that's it, or get the fuck out. Or we will work with you to make sure that your costs are in line with your expectations. Because right now, every single business is hurting for cash. It's the truth. It's, with interest rates going up where they are today, every CFO in the country right now that works in the space is looking at their balance sheet and saying, which areas am I spending money on that I can cut, right? Whether that means human capital or that means cloud infrastructure. So 2 years ago, it was like you could use as many cloud resources you want. No one would give a shit because, money was everywhere. But now everyone is tightening their belt. So in order to tighten the belt, you're going to look for all the low-hanging fruit. One of them is being your AWS costs. I mean, you know what I'm talking about. I mean, you're a CEO of your startup, so you have to be cautious with how much you're spending on AWS.
Actually, I'd want to hear that. Amit, how are you affected in Odia?
Well, so we were paying about $400 a month, but we got a good deal, man. We signed up with this partnership on Product Hunt that works with startups. So we got $5,000 in AWS credits like 6 months ago, and we paid like $700 for it. So we got almost 14 months of AWS credits for the cost of about 2 months. And so we took that deal a while ago. So we haven't been worrying about AWS cloud spend at all, but it's increased from about 100 2 years ago to about 400 because there's more activity on the platform, more people using it, more audio being uploaded, all that stuff. But $400 a month is nothing to run.
That's kind of crazy. How much data is that? $400 a month. Like, well, what is the throughput there?
You got to imagine that close to 2,500 audios being uploaded a month.
No, I mean it's per gigs, right? It's like how many gigs or terabytes? Well, the actual data throughput.
Yeah, I don't know the exact number on that. But it is a lot more than it was 2 years ago, obviously, because we've grown.
I mean, but $400 doesn't sound like a crazy amount for running a startup. Imagine back in the day, okay?
People have to have servers.
They'd have to buy the equipment and have the servers and have.
It's $5,000 a year. $5,000 a year to run a startup. It's like it's unheard of, right?
Yeah, it's crazy.
And of course we went with AWS because it's the most friendly. And so I think a lot of startups pick AWS immediately. Now Azure with their AI offerings and their OpenAI GPT APIs. That's it for a brand new startup that's specializing in AI. Microsoft's getting that business, and maybe Chris can speak to that. Maybe that's why we're seeing a little bit more shift into Azure in terms of how they're growing. But I do agree they're not targeting the same types of businesses Amazon is targeting.
Azure's all about bundling, baby. That's Microsoft's. Play.
It's not ChatGPT. It's the bundling thing.
Yeah. Microsoft knows how to sell their product by bundling it with other stuff and saying, look, you already spend money on X with us. You already spend money Y with us. Why don't you just spend Z with us as well? And we'll give you a discount so that your overall spend will be 10% lower. So it's like, oh yeah, why don't I just stay in the...
So what does Amazon have to do now to get investor? What is the Zucks moment that Jassy has to pull to get a rebound and sustain that rebound? Like what do they have to cut in terms of costs? For this.
So there's a couple of things, and they've already started doing it. Number one is cutting back on programs that are not yielding a tangible return. So one of the approaches that a lot of big tech has is that they'll take a whole bunch of darts. Imagine each dart as a new initiative, whether that be the Amazon Alexa, whether that be that health application or blah, 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 developing a whole bunch of, taking all those darts and then throwing them at a dartboard and then seeing what actually sticks on there, right? So that is the approach that a lot of companies take. So they have this fail fast mentality where it's like, look, we don't want to miss out on a trend. So instead of picking and choosing which trend that we want to go with, we're going to try to do everything.
Yeah.
And whatever is the good is going to rise to the top. Whatever is not good is going to sink to the bottom. So now Amazon and Jassy, they're focusing on the successful products. So if you look at on the call, they explained that very well, saying, look, our goal is to be doubling down on our initiatives that are generating high ROI, that are going to be very friendly to shareholders. So as an example, their ads business. Ads business.
How do you feel about what they said about the ads business?
Oh, dude, it's amazing. Everyone is transitioning right now from. That's the other chart that I was going to pull up in just a minute. But you wanna talk a little bit, Vitaly, about the spend in R&D and stuff that you were mentioning?
Yeah, you had a chart. I don't know where you showed it, but it was around 73 billion, and Amazon was the clear winner in terms of spend. Do you have that chart? He's muted.
You're muted.
Let me just pull it up real quick.
Was that your Twitter? I don't know what that was.
It's on my Twitter if you want to pull that up.
Yeah, I got you.
I mean, it seems like Amazon has the easiest way to just like massive profitability if they want.
Yeah. That's what I'm saying. And that's why I feel like this is going to be a decent opportunity. When did you tweet it, Chris?
Today. Just keep scrolling. There you go.
For anyone not following all our Twitters, hopefully we'll have it in the description. And Chris tweets probably 60 times a day. So, you know.
Now, Chris is becoming a finance Twitter must follow. If you're not following
Oh,
Chris on Twitter,
absolutely.
if you're not following Chris on
Absolutely.
Twitter, you're missing out. You have to follow him. Now,
Yeah,
if you're not following Vitaly on Twitter, you're not missing out on anything. But if you're not following Chris on Twitter,
you're missing out on spice.
boom, you're literally missing out.
Salty-
You're missing
salty
out on
comments.
him with his 150 followers tweeting Gary Black. Yeah, that's what you're missing out on. I love seeing him do it. I just like his stuff. I'm like, yep, keep tweeting Gary.
And a lot of salty stuff.
And a lot of salty stuff, that's for sure. A lot of salty stuff.
All right.
Okay,
so
so-
there you go. Chris, you want to go into this since you posted this?
Yeah, so if you look at Amazon, they are one of the largest spenders on R&D over the last however many years. So it's just, if you look at their amount, they have the ability to cut back on their R&D spend if necessary. So imagine right now Amazon saying, you know what, we are going to focus on our core business products that are generating healthy ROI until cost rationalization becomes a thing. Let's do that. So that's what Amazon is likely to do, which is cut back on their non-successful products. And that money is once again going to be redeployed into other areas that they see further growth. So as an example is Amazon is designing their own custom AI inferencing hardware and chips, which is amazing because that means that you're not reliant on NVIDIA and paying them high margins just to get your AI product offerings out there. So remember, anytime like Microsoft offers AI services and everything else, they're going to have to get NVIDIA to provide them some of the hardware to do it, right? So now NVIDIA is not going to be cheap about it. NVIDIA is going to say, no, you got to pay, I think what it is, like $10,000 per A100 chip, right? The GPU. So right now there's a huge toll in AI that's being paid to the hardware, people who are providing the hardware. So Amazon's like, look, we have scale. We can do this shit ourselves. Like we have a shit ton of data centers. We can do partnerships. We can invest in the AI research infrastructure for the hardware side so that this way, when we do our offerings, we're capturing that entire gross margin and we're not giving it away to other people. You know,
look,
so
speaking of ads, Kelly's going to be happy about this one, and she'll know why in a second.
Well,
Pinterest.
can you leave that up first before you
want
get out of that?
Okay.
Yeah. I mean, that's such a great chart. And I'm actually of the belief that most of these companies should not stop their R&D spend. I'm just saying if they ever wanted to just turn the knob and then one year just blast everybody out of the water and shoot their stock price to the moon, they all have this knob. Because look at Meta, 30% spend on R&D of their revenue. Amazon 14%. What's interesting, Apple is obviously lower, but how is Tesla doing all of that with 4%? So that's really amazing, actually.
Seems like it's an arms race. I feel like they can't take their foot off the throttle though.
So when
especially
you
when
guys
you know they're just spending that much.
when you guys are looking at
It is an arms race. Absolutely.
Well, not only is it an arms race, but you have to be. The one great thing about Tesla and Elon is that this guy doesn't spend money willy-nilly. All right. If he does research, he expects tangible results, right? A lot of big tech, one of the problems is they were like, look, if we spend more, that means that we'll get more products out there. And that's not how it works. Like, you know, just because you throw money at research doesn't mean that you're going to get tangible results from it. Elon, on the other hand, is like, no, if I spend $10, I expect 40 back in terms of value from my shareholders and my customers. So Tesla's always looking to optimize their research. So
You ever ask Farzad about that?
No, I actually, that's actually a good question. That might be something.
As Farzad about what?
About the R&D spend and the focus on efficiency. I feel like I saw a video of him talking about how even the areas where they work, there's like knobs, right? Or there's like colors, green and red, and like you kind of know how your team is doing if the knob is green or red, whether you're making the company money or losing money in real time, something like that.
I mean, maybe, yeah. We'll get him on the pod
So if you're
one
red,
day.
you know you're getting fired in a month.
Yeah, like it's something where like anyone can suggest anything to make the thing more efficient, and it's very, very little like chain of command in order to get something. If you can prove that something's efficient, then they'll just go along with it and implement it immediately.
Okay, this is important because it deals with Amazon. So Pinterest, they beat on everything and they got hammered by the market after hours. And the reason it's interesting is because they just announced.
You got to say it's Pinteresting.
It's Pinteresting. They just announced a multi-year ad partnership with Amazon. right? And it's like in terms of the ads business and how it's affecting a lot of other platforms, I think this speaks to Chris's argument in terms of Amazon's really going for it when it comes to growth, in terms of using all these different third-party vendors to grow the ads business. But the market didn't like it for Pinterest because they probably just don't see the potential in that. But for Amazon, the market should like it. And again, ads, the margins are like 85, 90%, right? It's just inventory, it's ad space. All you have to do is show your thing there. It's interesting how the ads business has grown significantly. It seems like they just focused on it more because no one talked about Amazon ads 2-3 years ago, right? It wasn't a big deal. But now it's like a $40 billion TTM
Pretty
business.
big. Yeah.
Can you take a look at what I just said? So this is right now digital ad spending for e-commerce. So the two juggernauts, of course, have always been Google and Facebook, and they've gotten the lion's share of total digital ad spend. But look at Amazon, where they were in 2019 and where they are today, right? They went from 7.8% to 14.6%. And this is with advertising growing. Digital ad spend is growing. Yet the other ones are starting to like peak out.
It looks like
So
it came
if you-
from Google, doesn't it? It looks like it's Google's the one that's
Yeah, because
leading
search
the
ads suck. Like,
Yeah.
you can't even see a photo when you search.
So-
Like, it sucks.
So when you see this, it's like, oh, wait a second. So how does this impact? So the same thing that's happening with Amazon on the AWS side, where they're flatlining, is the same thing that's happening to Meta, where they're flatlining, but they're flatlining at a market that's still growing. But Amazon is capturing market share. And that's important because the amount of money that you can capture. So you're not only growing your market share, so you're not only growing your piece of the pie, but remember, the pie is also growing. So that is a huge boost for Amazon going forward. So if you were to ask me right now, like Amazon is honestly, it's no brainer. Amazon is one of those companies that today the sell-off was definitely unwarranted. I think tomorrow morning, once the news gets a little bit more digested, people will be like, "Oh my God, it's actually a really good quarter." Jump right back in, and people.
I didn't get to listen to it, but did they say anything about Rivian?
There
I
was
don't know.
something there.
Yeah.
Did they said anything about Rivian?
They did say something about Rivian. I forgot. It was on let me pull up. It was on that Brad dude. My
You can
guy
search the
Brad.
transcript and just see what they say. I'm just curious.
My guy.
They'll probably have to take a further write down on.
I'm
Rivian,
sorry,
'cause Rivian's down.
I was muted, but yeah, they did say it. We reported
They did?
overall net income of 3.2 billion in the first quarter, while we primarily focus our comments on operating income.
Can you pull that up? Whatever you're reading from.
Well, this is this the same, Vitaly? Rivian also hit GAAP net income margin slightly. Well, yeah, it's not exact numbers, but so that's not what they said about Rivian, but that's what the earnings call had. But Vitaly can see the exact transcript.
Oh yeah, if you got it, I'd be curious to see.
You want to see it, or do you want me to just read it?
Yeah, you can read it, but just put it up on screen.
All right, hold on a sec.
Beat sales estimate by 1.4%.
By the way, I just want to let people know I sold about 75% of my Meta position now. So I have a little bit left, but I sold majority of it.
At what, 240 today?
Yep. Well,
Wow,
I
so
remember I had
might have got it
options,
on
so
the
I
peak.
I sold a lot of it because the thing is, once there are opportunities where you'll have generational growth potential, and Meta went from an 8 PE to now a 30 PE.
Yeah, no,
And
that's a good sell. It's a great sell.
Their business is, and I love Meta to death. I'll be honest. I love the company. I think they're doing very well. I think at this point they've cut where they could have cut. Now it's all about how much further can they actually grow their business. And that's like a little bit more shaky. So before at 80, this was a no-brainer. At 230, 240, it's like, yeah, I'm taking a little bit more risk by being in Meta than I am with being in the Google of the world or the Amazons of the world, which are very undervalued considering they still have a lot of growth.
How much percentage gain did you make on these calls?
I have to look, but a lot. My tax man's gonna fucking kill me, but it's all right. Whatever.
Yeah, well, I sold all my calls, but for Enphase, and they were both around 200. One was around 200, the other one was 200 plus, 250 or so %.
Nice. Me and Vitaly were in the 90s. So just letting y'all know, we did well.
And shares.
Yeah,
I still have the shares that I bought too.
Yeah.
Okay, so Rivian here. What do they say? They don't say much. I'd point out that this net income includes a pre-tax valuation of 467 million included in non-operating expense from our common stock investment in Rivian Automotive. As we've noted in recent quarters, this activity is not related to Amazon's ongoing operations, but rather to quarter fluctuations in Rivian stock price.
Has Rivian delivered many vehicles to them?
I am actually seeing a lot of vehicles. Not Amazon
the
delivery
EV
trucks.
Yeah.
Yeah, I'm seeing a lot
Really?
of EVs. Like the other day, I was in parking lot. I saw a Rivian. I'm shocked by how many Rivians I'm actually seeing on the road. Like, but then again, I'm in Georgia, and I think they're
gonna say, yeah.
manufacturing them in Georgia, right? So maybe that's why. I don't know. So yeah, but I think Rivian actually might be a good number 2 in terms of the EV space. They have a big backer like Amazon, who's buying up a shit ton of their fleet vehicles. So that supports an underlying business for Rivian. And hopefully they take a lot of the lessons learned from Tesla and apply them to their own business. And they don't have the legacy problems that the other companies do. So as an example, you look at the other traditional manufacturers, number one, they all have a fuck ton in debt. So they've been investing in tooling up and building plants all over the world. So, they have a lot of legacy costs. A lot of them are also, especially the American ones, they're also unionized, which means that they're paying union rates and union severance and union pensions. So that's actually another thing might hurt them a little bit. Whereas Rivian has nothing of that sort. They're starting with a blank slate and I think 11 billion in cash. They're burning cash though. Don't get me wrong, but they have the ability to, if they do a really good job of selling and everything else, become a competitor to Tesla. So
we'll see. Q3.
All right, we got another bad boy to talk about. It's the app we all use every single day. Snapchat. Revenue was $989 million in Q1 compared to $1 billion last year, so a decrease of 7%. Average revenue per user was $258 compared to $320, so ARPU is down. And then a lot of other shit is down. Here are the user growth. So we have,
I was gonna say, what's
15% user growth from 332 million DAU to 383 million DAU. Not horrible, but when Facebook has 2 billion, it's just a different animal. North America's flat. Rest of the world up 27% from 150 million to 190 million.
Wait, how many total users did you say?
So 383 million per day and about 840 per month or million per month.
And Twitter, how does Twitter compare to this?
Twitter's, I still believe, lower. Twitter's about 254 million DAUs, but they haven't reported since Elon bought it.
Mm-hmm.
So
how much is this worth?
So Snapchat, let's go to the actual stock.
I'm just curious what Twitter's worth. Cut that in half, basically.
He said what it was worth on the Tucker Carlson interview.
No, I mean, but this is what the market determines Snap is worth with all their users. So what is Snap worth with all their users?
Well, they had a market cap of 16 billion at $10. So at $8, it's probably like around, I don't know, 12, 13 billion, something like that.
Okay. And Twitter has half the users?
Twitter has about 1/4 the users. Yeah.
Okay. So is it worth $4 billion? He's down $40 billion.
Yeah. Why do you guys think
he's going to make it back? I have no doubt about it, but it's kind of just ridiculous, obviously.
I'm trying to be a little bit contrarian here. Is there any opportunity at $8, even if you want to ride it back to 12?
Snap?
Yes.
No, just stay away. Just buy Facebook.
There's let's call it 400 million Gen Zers that use this shit every day.
Are they in this chat? Can you actually do a little poll? How many people are here?
How do you monetize people with no income? Please tell me. I want to hear that.
Through their parents.
It's like, hey, Dad, I saw an ad on Snapchat. Can you buy this for me? I don't know. Maybe there's a market out there. I don't know.
I asked a fun question on our community.
Well, I just like to know who's using Snapchat. I don't use Snapchat, so I don't know. I use Twitter. I use it daily, so that's different.
I'm too old to use Snapchat, man. Like, it's, I could care less if people want to screenshot my shit and send it back to me and say, I told you so. Like, okay, great.
Well, do you guys remember the first time you used it though? Did you ever have a period of your life where you were in the app a lot?
Yeah. When I was dating.
When you were dating, right? Yeah. When you were trying to talk to girls. Because I remember that. And
they would use it. They would use it. Whenever we would like take pictures, they'd always
snap. I thought it was
filters.
Cool.
Back then it was like the filters. They were doing such cool stuff.
I was looking at the AR stuff. That's the only time when I ever used Snapchat where you could look and you have like the crazy hats that you could put on.
When they came out with the one that could read two faces at the same time, so you could do. That's when it was. Yeah, it was.
No, but is there any bull case to their AR tech, because it is decent, right? They have the lens, they have the user base, they can give AR to, like, from a business.
Like, okay, give them $10 billion tomorrow. What do they do with it? Like, what are they trying to do that they can't do now?
They're gonna
because they
release
don't have capital?
glasses, cool glasses at the store.
They already did that. shit.
Right, right. And
That's
you
what I'm
look at the whole
saying.
world.
Okay, it's-
And you
Supreme
look at the
bag
whole
holder
world.
says, amid Snap is a clown card, they will always be a clown card. There's no management. Evan Spiegel praised Apple on the ATT iOS changes without realizing it would duck his business. Yeah, that is true. It helped Meta at the end of the day.
Well, this is the thing. Like, the problem is Meta's in a position where they have so much money, they could engineer their asses out of this situation.
Yes.
Now we have Snap, which can't keep spending money, can't keep raising money. They can't get out of that situation because they can't spend enough. So,
Well, also to give a content creation argument as well, there's no content discovery on this app. They have this little spotlight thingy.
Mhm.
You can't even follow people here, bro.
you can't click follow?
You can't
Look,
fucking.
I
you
knew-
can't
I knew
follow.
people-
can't
Shit,
leave
you
a
can follow an
comment.
Odia. That costs like $5 now to make.
I knew people that were using that app daily and would still get confused about which way to swipe down to where are my settings or where it's an incredibly difficult user interface.
Interesting.
Also, what are they spending their money on that they're generating?
Let's
So
look,
it's
at, the,
almost
let's
like
look
this
at
is
the
a
insider
question.
trading. On
No, no,
Yahoo.
what they're spending it on.
Actually, I think the CEO was selling a lot of shares
Look,
during.
can you
the
pull that up
run-up.
on Yahoo Finance? Pull up the insider
Yeah.
trading on.
Chris,
just
you're getting
see.
that up right now?
I could pull it up if you want.
Oh, you pull it up. Yeah. What they are spending it on is so you guys know David Dobrik?
No, who's that?
You guys don't know David Dobrik? Damn.
I think Facebook went up because they think TikTok is dead. I think it's part of it, but when TikTok actually dies, Facebook is going to double. Okay, so wait till
All right,
TikTok
take
is
a
actually
look.
dead.
Share my screen. There you go. This
Oh,
is
there
the
you go.
insider selling.
Holy moly, macaroni, spaghetti, and cheese.
Jesus
pasta.
Christ, was there any buys? Did anyone
Nope.
buy anything?
Nope.
No buys?
Maybe you click the sell button.
That
on
answers
Apple
your
and-
question.
No,
Yes.
No, this is all just sales, straight sales.
Holy
Everywhere.
schmoly.
Wait, did Evan Spiegel sell? Go to. Can you command F Evan? EVAN. That's the
There it
Chief
is.
operating, chief financial officer.
What do you
They're all.
sell?
Oh
What
yeah.
do you sell?
Oh yeah, baby.
No, what was the last one though? What was April
Damn.
25th? No, that was at 29, but that was last year.
He sold
April-
today.
Yeah.
October
No,
24th. That was his last. He sold at $7
Right before earnings.
Yeah. Was Facebook trying to buy Snap at one point?
Yes. Zucks offered Spiegel $3 billion, and Spiegel said, "Fuck you, I'm going to build a
Shit,
dope
he might be able
company."
to just take over the company just through the stock soon. Holy shit!
Antitrust is going to be too high.
Nah, but see, Meta, this is amazing. The minute that he said no to Zuck, Zuck was like, "This is perfect." Like I could see Zuck just going like, "Okay, now
You're
there's
fucked.
no more such now there's no such thing as antitrust because now I actually have a competitor, right?
Yes.
Competitor. So now I can just build a clone, outdo him, and when they say, "Oh, Facebook, you're doing antitrust," no, I have a competitor. Look, Snapchat's
And they
a
stole
competitor to
stories.
Instagram.
They stole stories
Yeah.
on Instagram.
Bro, Zuck is all about that stealing business. All right, he'll steal whatever he has to.
He'll
grow
steal your
his
Listen,
mama, man.
it-
He'll
Zuck-
steal your
Facebook-
mama.
Facebook gets a lot of shit for that, but Apple is also notorious with that. They do.
Oh,
they
yeah.
they have your app on the app store. The whole like newsstand.
Oh, they
That
steal
was this
everything.
guy's like bread and butter. Then they were like just building it in.
This is a good comment by Myra. This is something we forget a lot. People get their news from Facebook across the world outside of America, where we have all this journalism. Like in other parts of the world, Facebook is journalism. So it's important to remember.
Bro, India, same thing. India, like
Yeah.
Facebook is
The
they
amount
still
of time
use
my
Facebook.
dad spends on Facebook Reels from these random Indian content creators, bro, it's almost like 5 hours a day. Like he's just on that shit.
You
all
you
day.
have to do an intervention. Like, Dad, we need to talk about your social
No,
media.
just because it's entertaining for him, bro. Like that's just what he
Okay.
wants.
My dad is 66 this year. Okay, my entire WhatsApp like thing is just polluted with everything from fucking India, like Facebook and Instagram.
You gotta
I'm
block
like,
your parents, dude. That's what
I
I
don't
do.
even know how
We're
he. kno-
Indian. We don't do that. We love our parents.
No, I
Dude,
blocked
my-
my mom from Facebook. It was just too annoying. Too many
What?
Trump, too many
You
Trump things.
blocked your mom?
Oh my god, the number of Trump.
I did that when I was
Posts.
in high school. I didn't want her to see my posts when I was talking to girls. I don't do
I
Bro,
that.
said,
my
I said, you
dad-
want to talk to me? You call me. That's it.
My dad has figured out how to add music to the reels, and so he sends me custom stuff, and he's like, "Can you give me a like? Can you retweet it for me?" I'm like,
Yo,
"No,
I think you should have your dad do a Tesla ad.
no." But this stuff that he puts on is like stupid. Like it's
Well, it's like-
Okay, I want to do one segment on another company, then I want to talk about Tesla advertising. That'll be our last one because that's a juicy one. So let's spend 10 minutes on this one first. I want to know what you guys think about this company. So user growth on Spotify has tripled from 157 to 515 million in 5 years, but gross margins are stuck at 25%, 58 million in free cash flow, but If you take 105 million of stock-based comp, they're negative on free cash flow, negative on net income. What are your thoughts on, I mean, there are very few products in the world that get 500 million monthly active users, but it doesn't seem like they can monetize that. Any thoughts on how you guys feel about this company and their gross margins?
My wife uses them. I don't know why, because I have Amazon Music. Like, why would you go that route? But
what do you
I don't
listen to
No,
in
no,
the car?
my wife also, she subscribes to Spotify.
Yeah.
Like, what are you listening to in the car? That for me is like 90% of the music that I listen to.
Yeah.
Is like
I am a big podcast guy, so I love listening to a whole bunch
no,
of
I mean
podcasts.
platforms. I'm saying in the platform.
But mostly YouTube. I use YouTube.
YouTube.
But
I use
in
YouTube
the
or
car?
YouTube Music.
In the car?
Yeah.
Yeah, because you have premium, so it doesn't matter, right? So
Yeah.
Right.
Yeah.
See, the
I'm
thing is,
Spotify, but I don't know about you guys, but they've been making offers. Like I'd be a little suspicious about like the active users, because it could also be under one account. Like me and my wife both have Spotify, so if we're both driving, we're competing over who's getting to use it. So after doing this for a while, they start sending me they basically sent me a discount, a deal where like I can basically have both of us for half price. So they're making the same amount of money.
we got that
two
deal, and I
accounts.
said no.
Yeah, I said no as well.
So
So my point is like it's just counting the beans a different way, but it's the same number of beans.
So one of the things that I feel like this is kind of shady from Spotify, but if you look at this, you're like, oh my God, they're growing their MAUs. This is amazing. They have 500 million MAUs. But if you look at the pricing, if you're someone in India, it's like $1 versus
99 rupees per month.
Right. So it's almost $1.25. And then you look at someone in the US, they're paying $5. So you may think, oh, 500 million active users.
Yeah.
But what does that like, how does that translate to revenue? And what does that mean from profitability? Like, what's your margin here? Because the margin is exceptionally different. Like North America is a lot more revenue that you're going to be able to get and a lot more margin versus someone who's in a smaller country. And eventually you're going to hit a saturation point in your business, because who else are you going to get? Now, the other thing that I've seen is that there's a lot of shady like things that I've seen on like, oh, get Spotify for a year for $2. And I'm like, I wonder if I should try that.
The problem with Spotify, even though I think it's a good business, by the way, long term, I think there's something to be made from it. Maybe just like Palantir, something to be made eventually. But the problem with a little shade towards it, but the problem with Spotify is that they don't own anything.
Yeah.
They're trying to own things right now, so maybe that'll work out. But
do you guys realize why their gross margins are 25% and they haven't changed?
Yeah, because they overspent.
Well, I'm saying the music industry controls everything.
That's actually not what you're correct. Yes, they overspent, but it's structural. So the record labels take 65% of every dollar. Let me say that again. 65% of every dollar. And so you have 35% left. 10% goes into marketing, R&D, all that stuff, right? Paying the business. Then you have 25 cents left on every dollar. And then that 25 cents they're using to spend $2 billion on podcasts, which aren't making any money. So to me, the bull case is they'll raise prices like Netflix, right? The problem is Netflix owns their shit. Spotify doesn't own any of their shit, because if they raise it from $10 to $15, the record labels will take the same 65% of those $15, which means at the end of the day, I think it's a phenomenal product. And I think this is an example of good company, bad stock, because I don't see how even at 1 billion users, you scale those gross margins above 25%. Because that means UMG has to say, hey, Justin Bieber's music is now worth less to us. And that's never going to happen. Michael Jackson's music is worth less to us. That's never going to happen.
If I was Spotify, I would launch my own record label and try to find
but they can't do that.
Coming artists.
They can't do that. They've tried, Chris. They've tried. UMG told Daniel, like, if you even dare think of signing your own artist, we will take our music so quickly you can kiss those 5. Because again, here's the argument. Do you think if Justin Bieber leaves Spotify, those 500 million people, let's say, I don't know, 20 million of them that care about Justin Bieber, will they leave? My answer is yes. My answer is yes, because the music is what matters. The music is what matters. Like, they're just a distributor at the end of the day. Like, if Justin Bieber goes exclusive to Apple,
compare it to the others in the space. Like, how's Tidal doing?
No, my point is, but Tidal had Jay-Z exclusive for 4 years, which is how they got the user base. And then Jay-Z went to Spotify. That's how Jay-Z built it and sold it for 300 million. Like, music is one of those things where it's like Friends and The Office, right? Peacock has subscribers because there's motherfuckers who love The Office.
Yeah.
Now think of that times 1 billion when it comes to music. Like, we all listen to some of the same music every single day, every single week. So there's no bargaining power, in my opinion, unless they use AI to completely demolish the music industry and say, fuck the record labels, we're just going to make our own music. But that's not possible, right? Because if you want to
Content, content is the moat, right? So that's the key right there. Content is your moat.
and
If you
Netflix,
don't have
Netflix sort of got out of this somehow because they had all those videos from other distributors.
They became a studio. They became a good ass studio.
And somehow, they did not lose the distribution because they liked Netflix money. Everybody liked Netflix money in the beginning until it was too late and they had their own studio. So Spotify does have to do something similar to escape this.
I think Spotify's only way to get around that is video. See, audio is very difficult.
They already have video.
No, but really push the video side of it because audio is really difficult to monetize.
Audio is not difficult to monetize. They made $300 million off audio ads.
No,
What's
but
difficult is the record labels taking
hear my point.
off of every.
Hear my point. If I'm listening to songs, you have to interrupt the content that I'm paying for to show me an ad. Whereas I can look at a web page and see the ad on the side, and it doesn't.
No, but Carlos, what I'm saying is there's 300 million people a month that use Spotify with ads. Monetizing is not the hard part.
But what I'm saying is that's a really hard knob to turn. You can't just crank it up anymore.
No. I disagree. It's not a hard knob to turn. It's a hard knob to turn when for every dollar, 65 cents is going away. Audio, because the reason your argument doesn't really make sense here is because of the radio, right? Like Sirius XM puts up $10 billion. Audio's been monetized forever. But when the record labels are taking all of the money and you're just a distributor, that's where I'm just like, fuck, this is a beautiful product and it doesn't make sense as a business. Because I've been trying to think of the bull case for Spotify for a long time.
Right, but what I'm saying is you have to, on audio, you have to interrupt the content people are paying for to show them the ad. Whereas with video, even if like YouTube, right, I can skip it, but they can still show me a video. They can still show me a picture ad on the top. So
that's all easily because people don't skip the audio.
It's like a passive sort of marketing. And so I just think like wherever they're at, that knob is dialed all the way up. I think that they have to get into video and like really push the video, or like they have to create events. This is what Netflix tried out with the Chris Rock special, which I was supposed to work on, by the way. I almost got on that gig.
Really?
Yeah, like I was actually working for them, and then they kind of bailed at the last minute. It was kind of a sketchy thing, but anyway, that's where they're trying to go. Try to create an event and make TV a place to come to.
I think Amit doesn't understand that people want to watch video. He started an audio podcasting company.
I know. He's like, I think everyone needs to get rid of their eyes.
Video definitely works. But again, this is the last thing.
He's like, this is a transition state on YouTube. I'm gonna go all audio.
It's important to understand on your platform.
Yeah.
Sirius
XM has
XM
to be a conversation you're having with your team.
Yeah, no, we're analyzing Spotify very deeply because
I'm saying your own company, analyzing how you can generate and monetize the attention that people are giving you on
yes, but that's my point. That's what I'm trying to say. Sirius XM, which is a audio media company, did $10 billion of revenue last year. Spotify did 11 billion. Now listen to what I'm saying. A tech company that gets a tech multiple did 1 billion more than a media company. That media company has better margins than the tech company. One is literally making money off audio ads. That's it. Spotify is doing the same thing with subscriptions, which is even a better business model than ads, but 65% of it is gone to the record label. So that's why I think it's not a question of monetizing. The global audio ad market is $40 billion a year. Audio ads. That's what I'm saying. Audio can be monetized. People are listening. The question is who gets the stake of it. And I think when the record labels take 65% of it, it's very hard to run a business that way.
Yeah, it's not an investable business because of that. If that changes somehow, Spotify gets some leverage, then it can change.
But granted, it's up from $69. Kathy sold at $70. It's at $130. So it's
you should never follow Kathy until
like the stock has gone up. It's done well for some shareholders who bought the dip 7 months ago. But my question is, it's a $25 billion company. Does it become a $100 billion company? That's the issue.
Yeah,
I don't see the path there without changing something fundamental about the business model.
Yeah,
they also have a lot of competitors too. I mean, you think about YouTube Music, Amazon Music, you've got Apple Music. Like there's so many other alternatives. So you don't even have the ability to tell the publishers to go fuck off and say to them, hey, listen, if we will cut your access off to this broad user base. They'll just say, okay, fine. We'll take our shit to the other user bases. Yeah. It's not a
or they have to pay a fuck ton of money and do an exclusivity thing like they did with Rogan.
The problem,
Rogan can't just go right
they don't
now
have that kind of money. No, the audio labels,
Rogan can't go right now and put his podcast on some other.
You realize why Bill Ackman tried to take UMG public and then it failed because UMG. If you saw a 6-hour or whatever presentation he gave on UMG when he was SPACing them, like he laid out a very big bull case. Like these guys control the content that the world listens to every day. he was like, they were going to go public at $40 billion fucking dollars, but then it all got messed up because of the SEC. But UMG is where the money is, not Spotify, not the distributor.
Yeah, it's kind of sad because I think artists, they get ripped off, considering like everyone thinks like, oh, this artist is going to get X, Y, and Z money. But most of the revenue and the profits end up going back to the record labels. Like they really, the artists, they get signed into this whole like I don't know if you guys ever saw it. It was like this debt trap where basically they're like, oh, okay, yeah, you can create this album for us, and then we'll give you a little bit of money up front to do whatever, and then you have to pay for X, Y, Z until you're done, and then you can do your next one. And then by the time you get out of the first debt, you're already loaded up with debt from like number 2. And a lot of these rappers and a lot of these people, they're so stupid. When they get the money, instead of saying, hey, I need to, keep my money on the side and make sure that I'm good so that I can probably do something on my own the next album, they spend all the money on dumb shit. And now they're literally working for the labels. Yeah, it's terrible.
I got the last point about Spotify. The problem is that also, all they have is music, basically. They're trying this podcast thing. When Apple puts out their Apple Music, they don't give a shit about making money on Apple Music. They just want you in that ecosystem. So, and Amazon too. So it's such an uninvestable business.
Yeah, YouTube as well. YouTube does not mind paying the record labels because at the point they just want.
It doesn't matter. Just be in our Android ecosystem. Use Google. Use search for images. Use our website. Whatever. We don't care about the music.
Okay.
Before you go on, the question now is data. How does data get monetized? Because that, I think, is the next thing that's happening. So if you look at AI and all the inferencing and all the models and everything else, none of that shit works without data. All right. Now, where is that data being taken? Well, a lot of that data is just being scraped from the web right now to feed these models.
Yep.
And they've been doing that for free. Okay. So none of that, like right now, we're creating content. We're doing all this shit. Let's say we put up a transcript. They're not paying us to do it. Like, I mean, YouTube is, helping us with the monetization here. But let's say we took an entire transcript, we put it on a website, we put it on X, Y, and Z, all that data that's being generated, that's being utilized by the AI models. How does that end up in the content creator's hands, right? Like you write an article or a blog post or something even on Twitter. Like I put stuff on Twitter. Twitter doesn't pay me anything, but these LLMs have been in the past taking that data from Twitter and monetizing it and running it using their AI model. So that was the reason why Elon
also with Microsoft.
Yep. So Elon is suing Microsoft for that specific thing.
We got some fans midway into the podcast.
That's a dick move, man.
I love the fans, bro.
I thought it was going to be him. I thought it was going to be him sexting on Snapchat.
Yeah.
We got fans in real time doing stuff during the pod. That's so awesome. Love you guys.
That's pretty good. Okay, so questions or what?
No. Well, questions, but I want to talk about Tesla and advertising. Gary Black and Ross Gerber went on CNBC. They said, fuck this, cut the margin shit, spend on ads. Gary Black had a decent point, I think. He said the cutting of margins is leading to like billions of dollars of losses, whereas you could keep those margins the same and you could just spend like 100-200 million on ads and keep your margins to be able to not have billions of dollars going down. Is there any argument for that? Or do you think user-generated content, as you guys were talking about before we got on the stream, might end up being the best advertising?
I think he's forgetting that it's still a winner take most. And I think Elon has said before he's prioritizing getting a larger fleet. To Chris's point about data, every car on the road gives them invaluable data. It steals a sale from an ICE vehicle, also steals an EV sale, puts pressure on other companies already slim or negative margins. There's like a million reasons why it makes sense for Tesla to crush the competition on a pricing lever that they are the only ones that they can pull, or they risk sharing the space with other companies. What they want is to be the first to have FSD, and then the other companies license it from them eternally. So I think if you're thinking long game, then that's the move. These guys are trading other people's money, right? And they have to show quarterly profits. So that's what they're thinking, and that's what they're focused on. But Elon is saying, now you have to understand too, every vehicle that they can sell now gets them closer to a vehicle that's 50% cheaper to make. What happens then?
Yeah,
whoever's left, it's over. So I think they know that, but I think they're trying to appease their investors. And I'm saying like Gary Black and Ross Gerber, people that have given them money to make so that they can at least go to them and say, we are trying. It's out of our hands. Elon's not listening to us. Why do you think Ross wanted a seat on the board? So I think they are incredibly short-sighted, even though I do think they know what Elon's plan is and they know how it's going to pay off in the back end. I think this is a bit of a show, to be honest.
Okay. Let's go to questions. Vitaly, what movie is the best cinematography in your opinion?
I actually responded right on the chat. I think one of the best looking movies I've ever seen was Roger Deakins is the best, by the way, in cinematography. But the assassination of Jesse James, the way they did it, especially the train scene. If you guys seen that scene, it's amazing the way he did that. You watch it just for that scene. The train lights are coming. The guys in the woods in the shadows. I don't know if you remember that, but it looked amazing. Yeah, looks amazing.
I thought Inception is the best.
I should answer this one. Why is Vitaly's in a hurry to end the pod? Dude, we do a pod every day, okay? Like an hour is plenty of time, and then we got to go to sleep.
Watch anything by Gaspar Noé.
See, the problem is Chris and Carlos. I think they stay up all night, right? Chris and Carlos are staying up all night, so they were chatting in the WhatsApp until like 4 a.m.
I am working. I work late.
Yeah.
I work too. So
stay early.
I actually go to sleep. I'm not sure.
I just enjoy this community so much. That's why I love being on the pod.
Amit is just milking as many hours you can get out of the YouTube algorithm. Okay, I'm trying to give you quality for an hour
every time. Every second they talk is a penny.
Bro, I had like 300 people on the live today, like 315. I was just like, let's keep it going. Let's keep talking about something else. What else you guys want to talk about?
Yeah, you got to leave. First rule, you got to leave them wanting more.
Exactly. And one day, what we're gonna do, guys, is we're not gonna end the stream. We're just gonna leave the stream. All of us will walk away, and we want to come back the next day and see how many people are there.
Bring up Vento's comment. Yes, Enter the Void is one of my favorite films.
That's a good one too.
Ever.
Yeah.
Bro, does anyone remember the live stream where I did that? You guys left and I had the stream for like 2 more minutes. And
we were. I think Vitaly and I were talking after, and we're like, "This guy's a douche."
No, it wasn't because it's because you guys left so abruptly, and I didn't want to end it, so I needed to like.
Sometimes you gotta end it, bro. Sometimes it's just.
I gotta pull it up. Which one was it? Oh, that was great.
So one of the people asked like any thoughts on Intel. You know, I got to do more research. Actually, Intel was one of those companies that I've been keeping my eye. No, I thought they had good.
I think it did okay.
I have to keep my eyes on Intel only because I really, really like Pat Gelsinger. I think a lot of people are like anti-Pat Gelsinger right now. They're like, oh, Intel is not doing as well. AMD is crushing them. But Pat Gelsinger he's the former CEO of VMware. The guy was with Intel when he was an intern back in the fucking 80s. The guy grew up around what's his name? Moore. It's like the guy knows what he's doing. The question is, how is he changing the business around to be more profitable? So I gotta do more research on it.
I like Cameron Vincent, what he says. We're going to stay here just for the chat. We don't actually care about you guys.
Check it out, dude.
Okay.
There was wait. I had an Intel thing, by the way, and I have a bookcase for Intel.
Whoa, what is that, bro?
Whoa. I've actually had Intel until
your mic is all scratchy.
My mic is
scratchy. You're good. You're good now. You're good now.
You're fine now.
Intel's bull case. Okay, it's going to take a couple of years to play out, but as soon as they can they're building the manufacturing in the United States. This is a big thing, I think, for the next decade. It's going to take them a few years to do this, though. So in the interim, you don't have to be rushing into Intel, and they kill their dividends. But as soon as that happens, I think it's a big deal if they can actually manufacture at scale in the United States with the IRA. I'm not sure if that affects the IRA, but there is some tax credits for chips, right? Chip manufacturing.
The CHIPS Act. They're going to get tax credit.
Not the IRA, right? The CHIPS Act. So this is a big deal eventually, but that's probably 2 years away. So you have time to accumulate Intel. But then, no, I think the charts. I was looking at the charts. The charts say it can take off like a rocket. Like possible $100 stock price. Intel, no joke.
If you look, Intel has probably
$100 stock price.
Possible. Yeah. The charts say it is very possible to go straight to $100.
Intel has so many
60 in its lifetime.
My ex girl's brother worked at Intel, and literally every time we talk, huh?
So Intel, it hasn't got above. What type of prediction is that? It hasn't ever been above 66.
I'm telling you.
You're saying it's just gonna.
Yeah.
Okay. It has a possibility. Yes.
So Intel also, on top of that, has a lot of patents. Like these guys have just like they've researched into so many things. They just missed the mark when it came to monetizing some of their projects. So as an example, the reason why AMD did exceptionally well,
I accepted
is
Fuddbucker. I
it's
I don't care who sucks my whatever.
the reason why AMD did really well is because they sold off their manufacturing division called Global Foundries. They spun that off, I think, and then they contracted with TSMC, who used EUV lithography to because that's like the cutting edge of stuff. Believe it or not, the people that originally researched EUV lithography was Intel, but they didn't go that route, so they missed the boat on that. So now they're actually recapturing that magic again, and they might be able to effectively compete going forward. They also started a GPU division where they were selling GPUs. They're nowhere near as good as AMD and NVIDIA GPUs right now, but people want more options. So I think Intel could be a player in that, and they are also the largest still to this day provider of chips to data centers for like CPUs and stuff. So their Xeon chip line is still like a big part of the market share. So in terms of x86, they're still really up there. So I would not think that Intel is a company that just is dead, and that AMD is going to kill them. I think that they could do well,
In 2
Carlos,
years.
you can finish what you were saying as well about Intel.
Oh, my ex-girlfriend's brother works at Intel, and he's moving up the ranks, like CMI. And every time I talked to him, he was always like, "Dude, buy Intel." But he would just say it just like that, like, "Dude."
When's the last time you talked to him?
6 years ago.
Because
Well,
he would
I interact with him a little bit.
if he told you to buy it any time in the past.
I was investing in other things, but I mean, he in other words, he's a guy. He's like, and I'm like, "How are you doing?" He's like, "Yeah, I buy it religiously."
Broccoli Bob.
He believes that it's that
Chris
is fun.
is Wikipedia. Yo, did you guys see? Do you guys keep up with the NBA at all? You saw the Bucks lost to Miami. They were the 8th seed, beating the 1 seed. You don't care at all? Nobody?
No.
Okay.
I've been watching the
Did
draft.
you see the Israel Adesanya fight last weekend?
No.
Okay,
I don't watch the
There you
fights.
go. Right,
Yeah.
same thing.
Dude, I was watching the draft, man.
The NFL draft?
Yeah, it's tonight.
Yeah, I don't care about the NFL. People are probably watching that too.
You guys watch lacrosse?
The what?
Lacrosse.
No, we don't. You watch lacrosse, bro?
No, I don't. Why are you talking about this?
Right, I got a jet.
Loser,
I'm gonna
bro.
go.
What a
Wait,
questions?
ask some questions from the audience.
Carlos, if you got to leave, you can leave. I mean,
Yeah,
if you,
I think I'm gonna jet.
Okay, thank you. We'll see you on
Yeah,
Sunday.
I'm trying to stick it out.
I'm trying to, but I got some stuff going.
Carlos
All right,
actually
I think
has work to do, Vitaly. He doesn't have to jerk off to VR porn like you.
I did that earlier. Okay.
What about if Sony or Microsoft starts a VR headset? Someone asked that.
They do. Sony has a VR
Sony has one
headset.
already.
So
But
does Microsoft.
Yeah, you need a. What's wrong with people? Nobody knows shit. This is the problem. Sony has.
He's like, one day Sony's gonna get into gaming. They're gonna crush.
Right,
bro.
they're gonna win
crush.
gaming. Guys, have you heard of the PS1? It's coming out soon.
I mean, don't disparage the comments, man. If people don't know, they don't know.
Yeah,
If
I'm gonna have to kick you out,
I'm gonna have to
Vitaly.
kick you out. Sony has a good VR, actually a really good VR. The problem is I think it's $600-700 just for the VR thing, and it doesn't work standalone. You have to hook it up to your PlayStation. And I love the PlayStation, by the way. I'm thinking of getting it. But the problem is now you're spending $1,500. So it becomes unaffordable for most people all of a sudden.
And Microsoft has something called the HoloLens, which is their version of AR. Well, it's more AR than VR.
Yeah.
But it's mostly for enterprises. So my hospital actually uses them.
It's $3,000 a device.
Yeah. Yeah. And the military actually has a large contract with Microsoft to provide AR HoloLenses for soldiers on the battlefield. So, but like I said, it's not consumer grade stuff. It's mostly enterprise level spend.
Yeah, and there are other small players, by the way, that are decent players, but no one has integrated as much as Oculus did, or as Meta did with Oculus. So that's why they're so ahead right now. Yeah. We'll see what happens if anybody cares, but I think this Christmas will be a good indicator if anyone cares when they come out with the Oculus 3. Yeah,
the other thing is there's another big player in it too, HTC. HTC is also a large proponent of the AR VR space, but they don't have the same level of studio relationships that Meta does, because Meta, they just like the last 5 years, they were just buying up studios right and left that actually made a lot of AAA, a lot of great games for VR specifically. Because when you design a game for VR, it's way different than if you're trying to design it for like a console. So you need to have like studios that are specialized in that kind of development. So Meta actually kind of got a little bit of trouble because there was a fitness app that they wanted to buy, which is a nothing. It was like
This is so stupid. Yeah, it shows you how the government is after Meta for everything. This company was worth like 400 million or something non-existent for these multi-billion-dollar companies.
Yeah,
it's ridiculous.
They banned it. Do you know anything about MPW, Chris?
That is a REIT specifically for medical properties, but I have not done the amount of research that I should have for it. So I'm staying away from that. I'm mostly looking at commercial real estate right now. The two main ones are Vornado and SLG, and I think SLG has the better value proposition. So I'm all about the SLG life right now.
Bring up Arlie. Arlie says porn VR sucks.
Does it? I never tried it.
The reason it sucks is because it's hard to do anything while you're holding these.
On that note,
there's also no bodysuit. That's the other thing that you need. You need like some kind of like bodysuit where you feel all the stuff happening.
You want that haptic feedback.
Yeah.
Well, you just put on. There's a device I'm going to tell you about right now.
Show it. Share it on the screen. Whoa, hold on, wait. Is it PG that you can share it?
No, it's not PG.
We're already demonetized by now. Goodness.
Oh, shit.
Yeah, I've never tried that, bro. It's a weird world.
Ask Vitaly to borrow one of his headsets. He's got like 3 back there. You know, just
gosh.
return it a little cleaner than you got it.
You know, Joe Rogan on the early days of the podcast, he made millions off selling fleshlights. I don't know if you guys know, that was the first brand he ever had sponsored the podcast.
Well, there you go. You called it out.
Yeah,
you called it out.
I actually remember that.
You remember this, right, Carlos?
A long time ago, but that's going way back.
That was like 2000.
Are you saying Finance Junkies needs to get into the fleshlights game?
Finance Junk in the Trunkies.
Meta selling VR bundle with a hands-free flashlight.
That's how we get to 100 billion users.
Yeah. To be serious for a second, Oculus has the best actual hand finger tracking right now. And so they're making it where you can touch and everything and do menus and all that. So these controllers are going away. It's going to be hands-free soon.
Troy said we're very boring. We're sorry, Troy. Well, at the end of the podcast, do you have flashlight ads? Yeah, that might have to be the case.
All right.
I think that's it for this week. This was fun 4 days. I think we averaged we had 272 here today, almost like 290 to 315 people every single day, which is awesome. So I know it was earnings week. Thank you guys for spending your nights with us.
Hopefully tomorrow we can talk about a little bit Apple earnings. But any predictions before we go? Is it Friday?
Yeah. Tomorrow we have Palantir Weekly. Remember, Chris? We have so much Palantir news to talk about.
Oh shit. Okay, yeah.
So Sunday night.
Yep. Wait. So when does Apple report? Is it tomorrow?
I think it's Monday, actually. Does anyone know Apple? I don't think they never do it on a Friday. Apple earnings.
All right. Thanks, Fuddbucker. I'm going to look up that Venus 2000. Appreciate
it. It's May 4th.
May 4th. Okay.
So next week, Thursday. I think they're going to get their butts kicked.
I think so too.
Yeah.
The CEO he hasn't sold in 2 years. He sells 3 weeks before earnings. No, that's obvious. I get it.
Yeah. Who knows?
I already sold my Apple, so if it goes up, I don't care anymore.
Carlos is holding on to that Apple. It's dear life. It's like, come on, don't do this to me.
Carlos is not investing in Apple. He's investing in Tesla and Enphase, and I'm not sure what else. But
I have a little Apple. But I mean, I did well with Apple. Apple did well for me. I have no beef with Apple.
Yeah, we know how well
they bought me a house.
If Apple goes down to 130s again, though, I'm fucking buying. I don't care. Like that's like
what is it at right now?
Level
167,
167, something like that. But if it goes back down to like 130, bro, I'm a buyer. Let's go, Apple.
Okay.
Yep.
That's it for us. We'll see you on Sunday night, ladies and gentlemen. Thank you so much for spending your week with the Finance Junkies. And we'll see you on Sunday. Good night, everybody. Have a good one.
Bye.